Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. Kevin, let's take a look at the four major indices because we are off of those session lows, but still in the red for 3 out of the 4. S&P 500 down 0.3%, Dow Jones Industrial Average down 0.16%, NASDAQ 100 still leading to the downside, down just over 0.5%, and the Russell 2000 up nearly 1%. Some strength in those small caps today. That we're seeing. The VIX is up just a little bit at the 21 level, but oil continues to move higher, up nearly 2%. And then that 10-year yield, 2.02%. Who would have thunk it? We see Treasury yield spiking above 2% for the first time in 2.5 years. All right, let's bring in our next guest for our cash tag segment, and that's going to be Harrison Sweeney, a research analyst at LikeFolio.com. Thanks for joining us, Harrison.
Thanks for having me.
All right, so we're talking Affirm, buy now, pay later. This is what Kevin and I used to refer to as layaway, and these companies have come out. We're starting to see some pretty good data on this. Now, this is one of those growth names that they don't make money, so they've been pummeled along with a lot of those growth names as interest rates move higher. But what kind of data are you guys seeing out of Affirm wrapping up this holiday shopping season?
So the outlook for Affirm right now is very mixed, and this is actually a great example of how we differentiate between the short term and the long term at LikeFolio. So the buy now, pay later trend itself is still showing excellent growth. It's something that we expect to continue rising, and that lines up with projections of this sort of loan, these point of sale loans, comprising more and more of consumers' credit that they take overall. And this is good for Affirm long term, but looking at a more short-term view, which is what we look at for earnings, Affirm is showing a slowdown in its demand growth, which is something that typically for these growth names, we'd see as a far more bearish indicator. Now, we're still maintaining a bullish outlook long term, but as you can see here on our outlier grid, which is comparing Affirm against other peers in the buy now, pay later industry, it's actually underperforming by quite a bit. The happiness is much lower, which is something that's particularly concerning here, seeing as it's actually lower than, they're not on this chart, but it's lower than even traditional credit companies like Visa. And it is something that we do see for these companies that are scaling quickly. The complaints often are focused on things like lack of customer support or technical issues. So that is something that we'll see when demand is rising like it is. And they did have a record demand in the holiday quarter that is reporting. But the market's already expecting that. They're expecting to see record revenues. And the guidance and the profitability are going to be the things that are very much in focus here. And we're taking a more cautious outlook based on the slowdown that we're seeing in the current quarter.
Harrison, when you look at these names, is this a proxy for consumer spending in general? So we should monitor consumer spending when we look at these names. I mean, this is a company that basically made its name as the financier for Amazon or for Peloton bikes, right? You could buy it for no interest, and you buy it through Affirm, and your money goes to Affirm, and they get fees from Peloton. Now they've got Amazon, Shopify, Walmart, Target. They're going to come out with a debit card that will allow you to buy things and put them in segments. So this company's still growing. It clearly got ahead of itself. It clearly has competition, which your graph shows, but they're still doing well. They still got big clients. And isn't this just like a lot of these names? They got caught up in the global sell-off. They got caught up in interest rates. Interest rates will affect this, right? Isn't this really just a company? Remember, because they borrow money and use that against fees. If interest rates go up, they could be extremely sensitive to their margins if interest rates rise. So did I get it right? Are those all the risks, or are there others that I'm not seeing here?
Well, I do think this being a proxy for consumer spending is an excellent point. Those partners are a huge strength now, with them having just the premier names in e-commerce with Amazon and Shopify as partners. The Peloton partnership was an earlier one, and that's definitely been detrimental overall in this most recent sell-off. Just having even an association to Peloton like that has definitely been somewhat damaging in terms of perception. But you're definitely correct about the interest rate concerns and its lack of profitability being the largest risk factor at the moment. Last quarter, I think their earnings were down some negative 1,000% more. So that is right now the thing that everybody's going to be looking at. I mean, yes, revenue growth is not a problem for this company. It's been phenomenal since their IPO last year. So it really comes down to how much we know that earnings are going to be, it's negative earnings per share. How negative? Is it higher than expectations? And how much does revenue beat by is the things that are going to affect the way the stock moves. We've seen some unprofitable companies that have sold off in this past market pullback that are, they're still not really improving their profitability, but they have risen on positive top line earnings. So there is a possibility that we see that here with Affirm, even if the earnings aren't necessarily, a huge strength this quarter. If they beat revenue by a lot, they raise guidance, we could still see a rise in the stock price from these levels. But long term, the lack of profitability is definitely the biggest risk factor here.
Yeah, lack of profitability. But then, on that second chart that you had, purchase intent versus sentiment on a 30-day moving average, we're seeing Affirm, not doing as well as Afterpay and Klarna and some of these other startups in this particular space. We all know that Block bought Afterpay, or is in the process of buying that, and then you got QuadPay on there. When you look at this type of thing where it's a hot commodity because it's something new, they're continuing to lose money, but is your data reflective that, hey, it's not just going to be seasonal slowdowns due to the fact that, the holiday shopping season's over, but the trend's actually going to continue to reverse here for companies like this?
It's just too soon to tell with that right now, especially for Affirm. Demand is still pacing higher than the previous year, which is overall bullish. It's just that slowdown versus the strength we saw last quarter that's really impacting the current short-term outlook being bearish. And I think Affirm is definitely suffering from success a bit here in that near-term comparison against its peers. All of those other names did not have the success that Affirm had last quarter. So that's part of the reason that they're showing positive growth in that near-term outlook, whereas Affirm is slowing. So there's a bit of the slowdown in the industry at large for sure, but Affirm is still one of the leading names, even if it's not necessarily showing that near-term growth as the others. It's still rising year over year. So we don't know yet if the current downtrend, this quarter-over-quarter downtrend, is going to continue, but we're definitely going to be watching it closely to see if it does continue to fade.
Kev, did you have a follow-up here for Harrison real quick?
Yeah, one last thing. Do you guys measure, or do you look at some of the things they have in the pipeline, like their smartphone app that now you can activate their site on? Also, like I mentioned before, the debit card coming out. Those aren't here yet, but they're coming. Are these going to be the things that drive numbers in the future? I mean, interest rates are going to be problematic for this company, right? Especially some of their loans are variable rate, and those are going to cause problems. But the growth is what it's going to be. And, you know, this is a company that is got some name recognition, got some high profile customers, but they still need more, right? You still got to make sure the world's going to want the pipeline. They're going to want to know. And the debit card and the app maybe can do that. But do you guys look at anything else, or is there anything else jumping out at you guys as you look to this earnings report?
Well, our mentions do comprise pretty much any sort of product that a company offers. So as new products come out, we add those to the list of things that are being tracked. So yes, we definitely will be looking for those things, and we will be factoring them in as they release and consumers start to talk about them. If you know they're not out yet, or if you know they're not making a substantial impact, then that will reflect in the current data. And it's obvious that right now there has been something of a pullback after that surge of holiday shopping that we saw last quarter. So
yeah,
this is definitely just one that we'll be watching closely as the year progresses.
Yeah, and Harrison, if you guys have an earnings score, you said it was slightly bullish on this one. Do you have an earnings score going into?
No, I should clarify. Our earnings score is quite bearish this quarter, based on the slowdown in the growth trend. So the fact that both happiness and demand have pulled back versus the prior quarter, and then looking back at what was happening in this quarter last year, there's been a significant pullback. So our earnings score is actually very bearish for this quarter. For today's report, we're looking at in the low 90s, I believe, negative 90. So this is almost as bearish as it gets in terms of short-term earnings scores.
Yeah, I don't think I've ever heard a score out of LikeFolio minus 90. So that you're definitely in the bearish camp as far as sentiment and your data goes. All right, great stuff, Harrison. Have a great day.
You too, thanks.
That's Harrison Sweeney, a research analyst at LikeFolio.com.